Longtime CNBC host Jim Cramer predicted that altcoins like XRP, Cardano, and Dogecoin would crash to zero on a recent episode of Mad Money. Finally, a well-known TV host cautioned investors that, despite falling cryptocurrency prices, it is still not too late to sell their holdings. Significant cryptocurrencies, in the opinion of stock pickers, are still overvalued, placing those who hold them in a precarious position. American television personality Jim Cramer is the host of CNBC's Mad Money. On December 5th, Cramer urged investors to liquidate their cryptocurrency holdings before it was too late. Major cryptocurrencies like Dogecoin, Cardano, ADA, and Ripple, according to the millionaire, could soon drop to $0. The $150 million wealthy American television personality who hosts the CNBC's Mad Money program. When it's time to leave the market, Cramer advises investors to sell their cryptocurrency holdings. The millionaire predicts a market collapse in 2023 and a drop in the value of digital assets to zero. Many participants predicted a market increase in response to his most recent comments because his earlier advice was frequently wrong. The Mad Money host urged viewers to sell their cryptocurrency as soon as possible during his most recent show. He implies that the cryptocurrency market won't be over anytime soon by saying that it's never too late to get out. You can't tell yourself it's too late to sell and beat yourself up about it. It's never too late to exit a losing position, in actuality. And if you own these digital assets, you get that. Most digital currencies have seen significant value losses, with Bitcoin down nearly 65%, and Cramer believes that the most speculative cryptocurrencies that could drop to near zero are Ripple, XRP, Dogecoin, Doge, Cardano, ADA, and Polygon Matic. Beginning with January 1, 2022. Additionally, there has been a sharp decline in investor interest. While some businesses struggle with liquidity, former industry titans like FTX, BlockFi, Three Arrows, Capital, and Celsius even declared bankruptcy. However, the market has gone through other winters before, and many digital currencies, including Bitcoin, have been negatively impacted. Then, citing Tether as an example, the issuer of USDT, Cramer claims that the industry is full of boosters trying to inflate the market with massive financial efforts. He claims that there is still a whole crypto-supporting industry that is desperately trying to sustain all of this, not too dissimilar from what has happened with subpar stocks in the past, such as the dot-com crash, and that you can't blame yourself and claim that it's too late to sell. The fact is that there is always a window of opportunity to exit a losing investment, and that is what you get if you own this so-called digital asset. Investors can always sell cryptocurrency and enter the market while prices are still viewed as high, according to Cramer. Cramer asserts that as the U.S. Federal Reserve tightens monetary policy, speculative assets may decline. As the central bank fights rising inflation, the monetary policy is tightened. The central bank raises interest rates and reduces the money supply when monetary policy is tightened. Bitcoin and other speculative currencies are being pulled out of by investors as a result of the Fed's actions. Americans have long held divisive opinions about cryptocurrencies. In 2017, he predicted that Bitcoin would reach $1 million, but he later changed his mind and called it illegal tender. In 2020, Cramer rejoins the Bitcoin movement, praising the 21 million coin maximum supply as a key advantage over fiat currencies and the conventional financial system. He purchased some of the assets when they were trading at around $17,500 and compared Bitcoin to gold at the end of 2020. Both Bitcoin and Cramer support are moving upward. He even asked that his salary be paid in BTC by April 2021 rather than fiat. However, the recent stock market crash has completely altered his perspective, and he is now back as a critic of cryptocurrencies. In September 2021, many of his predictions about cryptocurrencies turned out to be false. Because of China's Evergrande debt crisis, he advised investors to sell their holdings to avoid a stock market crash. Nearly $69,000 was the all-time high for Bitcoin. He also predicted that the Bitcoin and Ethereum correction might be over in January 2022, meaning investors should think twice before entering the market, 2 months later. Contrary to this prediction, major cryptocurrencies have kept falling and are now trading at $17,000 to $12,150 each, down from $47,000 to $17,100 since the year's beginning. Last week, Cramer noted that Jerome Powell, the chairman of the Federal Reserve, had said that investors shouldn't sell their stocks out of fear of a recession unless the Fed's aggressive leaders, who want to raise short-term rates from 5% to 7%, are restrained. With one foot outside the door, we must be prepared. He claimed that late last month, U.S. Senator Elizabeth Warren made it known that cryptocurrency needed to be regulated or the economy would be destroyed. She thinks that the dangerously irrational claims made by financial schemes that have failed over the previous 14 years are not an exception for cryptocurrencies. In a previous tweet, the CTO of Ripple stated that FTX exchange fraud would recur if less preventative measures were taken to stop asset managers from gambling with customer funds. Let's say, continued Schwartz, that you hold billions of dollars in someone else's account in perpetuity. If there are no verifiable controls that make taking such risks nearly impossible, then the temptation to speculate with that money is unavoidable. When Ripple released its third-quarter market report on October 27th, it revealed that their XRP holdings had decreased to under 50%. The business proudly asserts for the first time that it is becoming more decentralized than what its detractors claim. He claimed that simply because Ripple owns XRP does not mean that Ripple has control over the XRP ledger, XRPL. To validate transactions, add new features, and secure the network, XRP Ledger XRPL uses linked by 17 consensus, which means that each validating node receives one vote regardless of how many XRP it has. 4 of the 130-plus validator nodes on XRPL are currently run by Ripple. The truth is that a centralized organization still owns and governs half of the token supply, or roughly 50 billion XRP. It released an additional 3 billion XRP held in escrow in the third quarter. According to Ripple, XRP's total net sales for the quarter dropped from $409 million in the second quarter to $310 million. The sales, he continued, are solely attributable to his increased on-demand liquidity for DL transactions. One of Ripple's key products, OTL, helps financial institutions send money across borders. The partnership with Travelex, which will enable OTL Brazil to authorize transactions between Brazil and Mexico, serves as a showcase for the company's growth. Other OTL partnerships include those with Philippine remittance service provider iRemit and Singapore-based institutional digital payment solutions provider FOMOPay. As Ripple's global OTL business has expanded, it has continued to sell XRP through OTL transactions, and OTL volumes have gone up. Additionally, Ripple has provided an update on its protracted legal dispute with the Securities and Exchange Commission section. When the regulator at last made important records available to former SEC Division Director Bill Hinman's speech, he was victorious. The SEC and Ripple will submit response summaries in November and wait for the judge to rule on the motions, he added. On the other hand, the native token for Ripple is up 4%. Day-to-day trading near 50% as of publication. CoinGecko reports that the price of XRP spiked in the middle of September but has since been largely stable, hovering around current levels. XRP is currently down 6% from its all-time high of $3.40 in January 2018. Please share your thoughts in the comment section and be sure to click the subscribe button to receive updates.